So okay, sorry, let's start with this one. So okay, so for those who have come to this video, so better you go in the previous videos, because I have explained in the previous videos like Dubai or UAE geography related to what is the source of like corporate tax law. Okay, so and what is the introductions, exempt income, resident person in one video, and taxable income in second, tax rate in third, free zones in fourth, and now this is tax group a fifth video. Okay, so this is only for the corporate tax guidance. Okay, only for the guiding, only my purpose is only to guide you, not to teach you, because I am also learning. Okay, I am also in learning phase. So just so what is the tax group? Okay, so when can they be formed? Okay, so what is the tax group? First you should group. Yeah, in actually in India I have not come across this concept. Okay, so I will little bit I will explain you about this group. Okay, so in UAE or in IFRS there is a concept of grouping. Okay, so if the like in a VAT also, in corporate tax also, in IFRS I don't know whether it has or not, but in the corporate tax and VAT. So for this corporate tax or VAT there is a return filing. Okay, so return filing is there. So what they call, so there is a like if the 50% or more of the ownership is there of company A, B, C, so these three company can form a group form that is called VAT group also, and there is a corporate tax group also. So if the a company A, B, C, there is a certain condition, if the conditions are met, then this company can form a group. And for three entities there will be like three corporate tax filing return. Yeah, but if they form the group, then they will have only one corporate tax return. They only have to file one tax group return. So that is the actually benefit of this tax forming the group. Okay, so I will here everything is there. Oh, sorry. Two or more person who meet the certain conditions can apply to form a tax group. Okay, treated as a single taxable person, that will be considered as a single taxable person, and further all the obligations will be this or like representative, who are the representative entity for this tax group. So the responsibility will be these ones. And to form the tax group there is a certain condition, like it should be the resident judicial person. Condition 1. Condition 2 is the same financial year. Condition 3 is the same accounting standard, IFRS, it should follow. Okay, so judicial person, it should be same financial year and same accounting year. These three conditions, and the remaining four condition is like at least 95% of share capital. Okay, 95% of voting rights, at least 95% are entitled to 95% of subsidiary profit and net assets. So the condition is 95% for the tax group, and for the VAT group there is a 50%. Okay, so make a line that VAT group is 50%, tax group is 95%. Okay, this ownership, this share capital, voting right, and 95% ownership can either be directly or indirectly. Okay, so through the subsidiary. And tax in the tax group, the exempt person or qualifying free zone person cannot be form a tax group or cannot be included in the tax group. Suppose A, B, C entities, A entities, there is a B entities, there is a C entities, and there is a D entity which is exempt. Okay, so these four cannot form the tax group. Only three can form the tax group. So exempt entities or any qualifying entities cannot join this one. Okay, and what is the taxable income of the tax group? Taxable income, they have to prepare a single financial statement, that is consolidated financial statement. That is consolidated financial statement combining all this A, B, C. They have to prepare a single financial statement, and they have to eliminate the intergroup transactions. If they have make an intergroup transaction, they have to eliminate this one, and they can form the consolidated financial statement, and there will be some adjustment plus minus, and then will be the corporate tax return will be, and then the corporate tax, and then so what is the benefits, pros and cons of this tax groups. So for the benefits part, I will say there will be no transfer pricing if you are within the A B entity. If there is a intergroup transactions, then you don't have to go for the transfer pricing for each transaction. Okay, so there will be only one filings, and the related party transaction. If you have a lot of related party transactions within the AB, then you better go for the tax group. And also there is a tax loss. Okay, I will explain this one later on. So what is the cons of this tax group? If you are not if you don't want to form a tax group, then there will be the transfer pricing. For everything you have to go for the transfer pricings, and you will get the benefit that this is the benefit is actually, if you don't want to form the tax group, then you will get benefit of 375 on each entity. Okay, so on each entity basic exemption is 375,000, so you can claim this one. If you form a tax group, then basic exemption you can't claim it. Okay, so you can't claim it in the year, but you can claim if you don't want to form the tax group, then you can claim the basic exemption, but you have to file the 3 4 returns, also the tax loss. So what is the tax loss? Okay, so these are the like, what is the tax loss, like in Dubai, in UAE. Dubai means UAE. Okay, so actually, so what is the tax loss? If the tax loss of one entity, it can be set off with the entity B up to 75%. Okay, up to 75%. No, it is not like that. This is the tax loss transfer. Okay, but see, this is the tax loss transfer. But what is the entity A, entity B? If it has a profit, suppose it has a profit, then after profit it has to pay at the rate of 9%. Suppose these have a loss, then it don't have to pay the tax. So, and if both form the tax group, AB tax group forms, so there it will come profit, and there it will come loss, and then it will be subtracted, and then a net uh, on the net amount you have to pay the corporate tax. Okay, so that will be the benefits for the this one tax group. And so if there is a both if one entity is making loss or other is making profit, then better to form a tax group. Otherwise you can pay single, or you can claim the basic exemptions. And if you are a very large entities with a lot of related party transactions, or within the intergroup transactions, then better to form the tax group. So this is the concept of tax group. Let me complete this one, and then I will teach you then I will guide you on this administration related things.